Welcome to Bazaar Morning Call. This is Lata and Anuj and Sonia with me. You saw the Powell statements. Jerome Powell, the Fed chairman, made it very clear that he is going to be patient with the economy. In an interview yesterday, he repeatedly used the word patient, but also said, yes, the balance sheet will be smaller. In no hurry to raise interest rates. That was Powell's speak. And that's left most of the markets in the green, Wall Street in the green, as are Asian markets, partly in hope of something will come from the US-China talks, or at least not anything negative. But one has to really wonder whether we will be able to take much advantage of it. One of the big headwinds we seem to be facing is the earnings season. The two big numbers, nifty numbers that came, IndusInd Bank and TCS, have not done much to help their brethren. TCS, if anything, may cast a bit of a shadow on the other IT numbers. IndusInd perhaps is a story by itself. And in any case, the Nifty has been finding rather solid resistance at the 10,950 mark. So we have to ponder whether we can pole vault over it. At least results are not helping. Morning, both of you.
Hi, Lata. Good morning. Hi, Anuj. Morning. And, you know, our market has underperformed a lot of the global markets this month, right? So that continues to be a bit of a spot of bother. But, Anuj, morning, this the number that came in from TCS, the margin disappointment, because it has a high weightage and it could, of course, drag Infosys down as well today. You get a sense that the market could start on the back foot. I mean, how would you approach it, given the context of the numbers?
Yeah, morning, Sonia. So, let's first look at the overall context, and then, I'll spend some time on TCS and Infosys as well. I think the point you made, just let me carry that forward and give the internals. MSCI emerging market this month up 3.3%, Asia ex Japan up 2.2%, MSCI India is down about 1.36%. Some part of that, a large part of that is because of currency. But, let's not forget we had a massive outperformance in the month of December. So this is some bit of mean reversion happening. This is healthy for the market. It should not hurt anyone. The first hour, of course, of the market will be dictated by the TCS reaction. We were making this point yesterday. Remember that what's the missing piece in puzzle for the market? If the bank Nifty is so close to high, if so many stocks are close to highs, it's the TCS and Reliance stock. They are still a bit soft. So a large part of this perhaps has been priced in. Even yesterday in closing bell, we could spot shorts being taken in TCS over the last hour of trade. So perhaps the first hour there's some shorts in TCS, but having corrected so much, it won't surprise me if at some point there's some buying in TCS. And the last hour of trade could actually be about Infosys, because then you would want to preempt a move.
The next result.
Exactly. So I'll revisit this once again, but the bank Nifty is showing first signs of fatigue near record high. Yesterday, of course, it was weekly options expiry, but it's showing some signs. And if it makes a move back to the 20-day moving average, which is about 300, 400 points low from here, I think that would be a good zone to buy. This is still a buy on dips market. Of course, selling on rallies is also working, but that's only for the ultra-smart trader or the nimble-footed trader. Otherwise, the bigger trade is still buy on dips. The range of the Nifty is very small now, 10,650 to 10,900. Now let's come to TCS and Infosys. And this is my thought process. Of course, I could be wrong. There's a good chance that the stock corrects perhaps in the first hour. But in the context, it's already corrected 17% from its highs. And it's at its 200-day moving average. The call that you need to take now is the bigger call. Has the IT rally peaked out? And if that is the case, then is the sector going to be an underperformer? Or is this just a blip? Because, it was expected to be a weak quarter. That, I think, is the big call right now. Whether, you want to say that the rupee tailwind is over or, it's just a blip. I think that big call will be answered over the next few weeks. Shorting Infosys, extrapolating TCS could be the biggest trap, because what will happen is, and Infosys has shown signs of outperforming TCS over the last 2 weeks. What could happen is that, because you may want to extrapolate that, in the last hour, I don't think too many people would want to leave shorts open ahead of that big buyback and dividend announcement. And also, sometimes companies can do different performances, like TCS has always done that. And now with the TCS's margin disappointment, there's some room for that. If Infosys' margin is okay, is in line with the expectation, there's some room for that valuation gap to narrow a bit, the kind of valuation gap that TCS commands over Infosys. So I think just don't extrapolate TCS for entire IT sector.
As far as the micros are concerned, but for the 950 barrier, 10,950 barrier itself to be pole vaulted over, the market's worries are real. There is a reason why we outperformed last 2 months and underperformed this month. It's crude. Last 2 months, we saw crude go from 65 to 50. This time, we're seeing it go from 50 to 60. So the direction, the delta is to some extent determined by that.
Yeah.
Now, if crude peaks off at 63, as some technical experts believe, then we have something positive. But at the moment, the market doesn't have that sucker.
Yeah.
And results is not a sucker this year, this quarter. I mean, it's besides, you normally would expect the starting companies to be good. We already know that autos are not going to be in a fine spot. And banks, a lot is being pinned that this time finance will do well and oil companies will not do well. That is yet to be proven. What Anshula Kant was telling us yesterday, that there are still assets which are not getting resolved and which maybe some have provided, but others have not, will remain a bit of a worry. Yeah. So I don't know whether the market has enough zip to be able to conquer 10,950.
No, the market does not have triggers to take out 10,950. I think that point has been made ad nauseum.
By the market itself.
Exactly. And, it's gone there 9 times and slipped from there. So, obviously, the market lacks trigger. The only point is if the market gets into some kind of momentum for any reason, in that case, just like the earnings have not mattered, at the best of the market times, this time also that could be the case, right? Because the market always lives in hope that, next quarter, how many quarters we have been saying that, this quarter is going to be the troughing out and, the earnings are going to improve. I think at least 9 or 10 quarters. So that, the hope trade will continue right now. But I take your point, the market lacks trigger right now to take out 10,950.
But on the subject of TCS, Anuj, just to follow up there, from an investor standpoint, what should one do? Because the revenue growth is still pretty strong. BFSI has grown almost 9%. And, you were also mentioning the stock has already come off from its highs. Yeah. So, from an investor standpoint, is it just a minor blip and one should not worry much?
Yeah, it's corrected, but, it rallied 50% last year, or nearly thereabouts. So, it was the big daddy of the stock market. So, it's still an expensive stock. Again, my bigger point is the IT rally over or is this just a blip? If the IT rally is over, you have to look these results in that context.
I think we don't have evidence.
We don't have evidence of that. So right now, I think it's tough. It's a tough call right now to take that. Whether you want to sell your TCS holding or you want to accumulate, because you don't know whether that sectoral move is coming to an end or not.
In fact, we'll hear from the management. We'll get to know what their tone is, the body language is in just moments from now. So you can perhaps make your call post that. Let's take a look at before that at what our wise experts have to say as we head into trade this Friday morning. Chris Wood of CLSA says fund managers entered 2019 shaken and stirred, judging by greed and fears meetings in London this week. So he says more of a relief rally would not surprise, most particularly given the absence of the traditional year-end rally. Still, he says greed and fear remains of the view that the bear market action has not ended, even though greed and fear also remains hopeful that Asia's relative underperformance has maxed out. On trade, his base case remains that a deal will be done between America and China within the allocated 90-day period, though it is clearly a positive that trade negotiators commenced on talks on Monday in Beijing.
Okay. Well, that of course remains the open question, as does the government shutdown actually. Trump's tweets that he will not go to Davos also seems to be suggesting fears that the shutdown may continue. It's not mattered to markets as of now. There's more advice coming in from Goldman Sachs. Sunil Kaul of Goldman Sachs thinks inflows in domestic equity mutual funds are likely to remain soft in the near term as we head into general elections this year. He says analyzing mutual fund flows over the past 3 general elections also suggests some evidence of a slowdown in monthly MFs before the elections, although we acknowledge that Goldman Sachs acknowledges it is based on a small sample. He continues to expect a range-bound market environment in the near term given earnings downgrade risks, still elevated valuations and less supportive fund flows until elections uncertainties clear in the second quarter. That's, of course, the second calendar quarter.
Okay, well, let's get you some money market views as well. Yesterday, we saw the rupee gain marginally, 5 paise or so. 70.40 is where it ended, but it did reverse its 2-day losing streak. Bhaskar Panda of HDFC Bank speaks about today. He says the rally in oil prices was primarily responsible for the rupee to breach that 70.50 mark recently. He expects the dollar-INR pair to start consolidating around 70.50 pivot in an intraday range between 70.35 to 70.45 for the trading day.
All right. And Bhaskar Panda on bonds, he says the Indian benchmark yields have also been consolidating. He expects the same range trading theme to continue today. He says the 10-year benchmark bond yield is likely to trade between 7.45 and 7.55 for today.